Hi, welcome to the next episode of Real Talk on Real Estate with your local realtor, Mark Phillips. Today we're going to be talking about down payment assistance programs with my friend Matt Goldberg here of VIP Mortgage. I hope you noticed that we added some more luxury stuff to the set here, so spared no expense for this video. When we come back, we're going to tell you everything you need to know about down payment assistance programs. Hi, welcome back to this episode of Real Talk on Real Estate with Mark Phillips, your local realtor. This episode, we're going to cover down payment assistance program with Matt Goldberg from VIP Mortgage. Matt, all my clients are asking me, especially ones first-time home buyers and stuff, they're asking about down payment assistance programs. Can you tell me what is what we call in the industry a DPA? What is a DPA, down payment assistance program?
Absolutely. Down payment assistance programs, as you can imagine, are just that. They are loan programs that have been set up to help buyers, sometimes first-time home buyers, but not necessarily, cover some or all of their required down payment when buying a house.
Excellent. The question always comes up is, since this is basically free money, clients want to know who invented this program, how did it come about? So can you give me a little bit about the background and history of down payment assistance programs?
Absolutely. So the various down payment assistance programs were set up by the various industrial development authorities around the state and local municipalities. IDAs, as they're more commonly known, are entities that are set up to help establish and bolster community and economic development. And around the housing crisis of 10 years ago or so, there was a lot of problems, and these housing authorities realized that there was an issue that needed to be addressed. And studies showed that one of the biggest problems in overcoming purchasing a home was the ability to come up with a down payment. So they established these programs to help aid home buyers in paying those down payments. One of the most well-known programs, Home in 5, actually just celebrated its 5-year anniversary, and over that time has already done $3 billion of loans.
Wow, that's amazing. What are the different types of down payment assistance programs available? Because I know there's several different types depending on the type of loan you're going after and everything else. So could you explain to the audience the different types of down payment assistance programs?
Absolutely. So there are, as you indicated, a multiplicity of programs. There are 3 major down payment assistance programs. Each of those has a number of loan programs associated with it. So using the word program is can be non-specific, but let's talk about the 3 high-level assistance programs. Number 1 is Home in 5. That is designed to help people who are purchasing in Maricopa County. Number 2 is the Home Buyer Solution, and that is for Pima County and the city of Tucson. And then the third one is Home Plus, and that covers basically all of Arizona minus Pima County and also some exceptions for Maricopa County.
Okay. Is this a first-time homebuyer program specifically?
No, as I alluded to earlier, a lot of people think it is.
Okay.
And they're under the assumption that it is. But it's not required at all for someone to be a first-time homebuyer to take advantage of a down payment assistance program. And in most cases, you can even own a home and get qualified to purchase a new property with a down payment assistance program.
Okay, excellent. How do people go about qualifying for these?
Qualify as usual. You call your lender, assuming that they are
Matt,
assuming that they are able to do these programs for you and understand, more importantly, how to do them and what's involved. And you go through a typical pre-qualification process. The thing to remember is that because of the way these programs are designed, they are more restrictive in the selection and eligibility.
okay. Let's talk a little bit more about that. What are the basic criteria to be approved for down payment assistance programs?
Sure. One of the biggest things is you can't make too much money. This is designed to help improve the economies in certain areas. And so it's not necessarily set up for someone who's making $150,000 and socking away a bunch of cash to be able to take advantage of it. So there are maximum income limitations. Depending on the program, you're looking at $83,000 to $93,000 maximum per year.
Is that if it's a married couple, that's joint?
Again, depending on the program, it can be all borrowers on the loan. It's typically all borrowers on the
Okay.
loan. Let's go that way.
All right, what are some of the other criteria there?
Sure. So we've got max purchase prices. 372,000 is basically the max purchase price, but there are for the Home Buyer Solution Program in Tucson, especially, there's no limit. But there aren't as many. You're going to run into an issue if you try to go much above that anyway, and there are still limitations for purchase prices imposed by certain other programs. For example, that maximum purchase price limit is already prohibited by FHA, so you
Okay.
couldn't do an FHA down payment assistance program for that much anyway.
Okay, and typically what percentage of the loan do these cover?
So that's a very good question, and again, it depends. They're typically going to cover a range of 2 to 6% of the loan amount.
Okay. How is the assistance calculated and used by the borrower?
Sure, and that's the big question. That's the question that usually is most important to borrowers that I'm talking to about
Okay.
down payment assistance programs. So if we can kind of take an example of this, let's say someone's looking to buy a home and they're wanting to do 3% down. On a $100,000 loan, $100,000 purchase price, their required down payment would be 3%. That would leave a loan amount of $97,000 left. The down payment assistance is actually calculated on the loan amount. So if you're doing a 3% down and you're getting 3% down payment assistance, there's actually a $90 shortfall in what's being covered by that under that particular scenario. But it is covering the majority of your down payment.
Okay. Did some things change on these programs as of January?
Yeah.
Not
and
2018.
January 2018, yeah, there was a big overhaul to the way the assistance was actually handled. So prior to that, these were grants. The down payment assistance was a grant. It was essentially, if you qualify, you get this money. It's yours, no questions asked. Once you are in the home, it is 100% yours. There is no recourse. And what was happening, at least the anecdotal evidence suggests that people were using the DPAs as a vehicle to get into a home, get some, quote, free money, and then they were refinancing out of those loans after a short period of time.
Oh, all right.
So,
that didn't go so well with Uncle Sugar, did it?
No, I'm sure. So the IDAs changed the way that grant was provided to the home buyers. And so now it's actually a silent second loan that's forgiven over the course of 3 years.
Okay.
So each month, 1/36th of that, whatever that amount is forgiven. So for example, if someone were to sell their home after 2 years, they would still be on the hook for 1/3 of whatever their down payment assistance provision was.
Okay. Big thing always at when somebody buys a home is closing costs. They get surprised when they sit down at the title company and they look at numbers on a sheet. And so what can you tell me about closing costs with these down payment assistance programs?
Well, there's an expression there's no such thing as a free lunch, right? So
Yes.
with the good comes the bad, and one of the issues with the down payment assistance programs is there are additional fees. So you're probably talking somewhere in the neighborhood of another maybe 1%
Okay.
of the purchase price or loan amount is going to be an additional fees. There's a variety of fees that are associated with them, and depending on the DPA that a buyer is going after, they may or may not have enough money to cover some part, all of their closing costs. As we talked about, because the range is from 2 to 6%. There might be someone who's doing a 3% down loan, they're only getting 2% assistance, their closing costs have been increased, and now they've got to cover an extra percent on their down payment and these additional fees.
Okay.
So it definitely is something to consider when looking into the DPA
Okay,
programs.
so back a long time ago, I had a teacher in school that used to call it tin snaffle. There's no such thing as a free lunch.
Yeah.
So if you're gonna get these, you may pay for it somehow, but they are a good program when you can qualify for them and they work for you. Can every lender do down payment assistance programs?
In theory, yes. In actuality, no. I mean, you do have to, as a lender, you do have to get certification or training to be able to do it. But there are over 100 lenders in Arizona that are able to do it.
Okay.
With that in mind, VIP Mortgage is one of the top producing DPA lenders for, let's see here, I think I have it written down. Chandler, Mesa, Peoria, Scottsdale, and Tucson.
All right.
We're in the top producer list there, which means we've got the expertise that's required to actually get them done.
And out of this office with all the loan officers in here, who handles the down payment assistance programs?
There are a number of people that do them. I would say I'm one of the people that's pretty good at
All
doing
right,
them.
okay, that's why we have you here today. I got it on good authority that he's the man for DPAs. So if you need one, contact me or contact Matt here, and we can get you that information. Downsides and hazards to the DPAs. We covered
Sure.
a little bit of this, but go in and see if you can cover some more in depth on that.
Yeah, let's kind of tick it off, right? So number one, we touched on was that they're more restrictive qualification criteria. So even though it's the same process to qualify, it's a little bit more restrictive. The debt to income ratios are lower. There are limits on income. We didn't talk about this before, but there are limits on FICO scores. So your credit score actually needs to be at least a 640 and as high as a 680. Again, everything depends. To back up one more piece, in calculating the amount of down payment assistance that someone can qualify for, one of the things that's kind of cool is there's a special incentive program. So if you fall under, let's see here, make sure I don't miss anyone. The additional incentives, again, depending on the DPA, for qualified military, first responders, teachers, and then income qualified borrowers. So they're actually, if you make a small enough amount of money but still qualify, you may actually qualify for an extra 1%.
Okay. You mentioned front and back ratios on those.
Sure.
Got numbers on those, or they vary depending on the program?
So this is pretty much across the board. We're looking at a 45 debt to income ratio. There are exceptions. So depending on some of the conventional loans that you're doing, you can potentially go up as high as 50% debt to income. But one of the big differences is the FHA loan. Someone doing a regular FHA might be able to get up to 57% debt to income ratio, and here you're limited at 45. So that makes a big difference in the amount that someone can borrow and qualify for.
Okay. Are these programs for everyone?
Absolutely not.
Okay.
Especially with the changes that were applied as of January 2018, it definitely is something where you need to consult with someone who can explain the pros and cons of the programs. They are no longer just a resource for free money, what I would say. These things can end up costing a lot more over time because of this new 3-year restriction. It's really important to do a cost-benefit analysis, and that was one of the hazards that we didn't necessarily talk about, is that these carry higher interest rates. They carry additional fees that we talked about. It takes 3 years to get out of it. If you're going to get out of it, and assuming rates are lower in a place where you can, you're going to pay for a refinance. So that's an additional cost that's just sitting there down the line if you do try to take advantage.
Okay.
And they're more involved. It requires more paperwork. Sometimes can take a little bit longer to get them done. So it's now designed, and it was originally designed, but it has been revamped to really cater to those people who need it. Okay. Who don't have another option if they are trying to become homeowners.
Not just somebody trying to scam the system.
Yeah, and I wouldn't necessarily say it's a scam because
this is for somebody who actually needs the assistance, not somebody who says, hey, there's free money out there, let's go get us some.
Yeah, and I think, a number of the DPA loans that I did in the past couple of years, excuse me, were for people that had some money but didn't necessarily want to use it, and they took advantage of those programs and,
because it was legal.
Because it was absolutely above board, and now it's really getting to the point where this is more of an as-needed basis.
Okay. If somebody wants some more information about these programs, you can contact me directly, or you can contact Matt. His phone number should be right about here on the screen in front of you several times during this segment. So anything else you'd like to say to wrap up about DPAs?
The only thing I'd say is if you have questions, call. It's always better to get some information now and kind of set your course, and we can typically get that handled for you in a few minutes.
All right, that wraps up this episode of Real Talk and Real Estate with Mark Phillips and Matt Goldberg. If you like this video, please like us and share us on Facebook. Follow us on YouTube as well. If you know of anybody that's interested in buying, selling, or investing in real estate, please get a hold of me. If you know anybody who's interested in finding out more about home loans, whether it's down payment assistance program or standard loans, conventional loans, FHA loans, VA loans, Matt or Jeff or the other fine folks here at VIP can give you a hand with that. Again, this is Mark Phillips with Real Talk on Real Estate. My friend Matt Goldberg here. We'll catch you in the next episode. Thank you very much for watching.